Good afternoon, ladies and gentlemen. I would like to start the financial results briefing for the fiscal year ending in February 2025, third quarter. Usually, I would go over the numbers, and after that, Mr. Kawano will give you the overview of the business strategy. That's the same format we like to follow today. For Q3 results and business progress summary, there are some highlights. As you can see, the first point is that September this year, we have started consolidation of Lily Color into our P&L. So the number have grown naturally. Excluding Lily Color, we have a apple-to-apple comparison. Even on that basis, for Q3 year to date, we have had the record high net sales for the parent company. So the business has been going well. Not only just the net sales, OP profits have also exceeded the same time last year results. So the third quarter result was quite strong. On the other hand, we have announced several different events. One is the revision of the forecast, and another is the share buyback program, which we will discuss later. And in the lower panel, you can see the business topics. In 3 months, in Q3, we have opened 2,700 Tsubo facilities. So business has been expanding. And we have opened Upper Hotel Wakayama, and also in Q4, Upper Hotel Shonan and the Grand Lector Yugawara. So we have been some progress in new facility opening as well. In Q4, we have completed the TOB of Novalis. So this will be consolidated into our financial statements as well. So these business topics will be recapped later by Mr. Kawano. Now, for the third quarter financial results, I would like to go over some of the more details. First, on the numbers, on a consolidated P&L, the ones in the red are for Q3 and Q3 year-to-date numbers. For Q3, 3 months, we had 19.8 billion in sales and 1.732 billion in OP. On a total basis, we had 40.1 billion and 4.4 billion in net sales and OP. As I said at the beginning, we have consolidated Lily Color. Therefore, on sales and other items, we have seen some tremendous growth. Well, to make it easier, excluding Lily Color, I would like to show you the apple-to-apple comparison. As you can see on this table, for Q3, we have 11.1 billion, and for Q3, you can see we have 31.467 billion year-to-date. Compared with pre-COVID, February 2020, that was a peak year. We have exceeded the pre-COVID level, the peak level in the past, especially for Q3, 11.186 billion. In terms of any quarter, this is the best and the highest record we have had in the history. And as I said in the key points, we had a very smooth progress for the last 3 months or 9 months. So year on year, you can see the growth rate on the right-hand side for Q3, 3 months, as well as for 9 months. For year to date, we have exceeded the same time last year levels on all of the levels. As you can see at the top, in terms of business investment, we are seeing some catching up of the sales with the investment. Therefore, you can see more than the growth rate in sales. OP growth rate is higher than the growth rate of sales. So systems and people, and we have invested a lot. However, despite the significant investment, sales are catching up today. So finally, we are entering into a stable income generation phase, and we are looking forward to more harvesting of profits going forward. So in prior period, we had more investment than profits, but going forward, we can proactively pursue more profits compared with the level of investment. Next page shows the sales breakdown by service. Well, as I said earlier, compared with the previous year, Q3 last year, as well as Q3 of pre-COVID year, sales were higher. That is the highest in our history. In a more detail, especially accommodation or room rent, net sales increased significantly. As you know, at the moment, we are seeing the strong demand in the inbound tourism. Therefore, especially the hotels that we have acquired as completed buildings, those are the ones that we can book sales right away on next day. Therefore, we are getting some benefits out of those opportunities. So we are increasing sales that way. And at the same time, for the meeting rooms, room rents, option, and accommodation, we are increasing profits as well. As we will discuss later for the meeting room business, by adding new products, we are getting ready for the next stage of growth. At the moment, hotels are growing, but at the same time, for meeting rooms, there will be a jump up going forward in terms of their contribution going forward. Next slide shows the balance sheet on a consolidated basis. From Q2, we have added lily color. Therefore, the size of the balance sheet is much larger this year. Store openings and hotel for the hotels and meeting rooms, we have been very proactive in the opening activities. Therefore, the cash has reduced by 10 billion. On the other hand, for the fixed assets, it has increased significantly. So that is the highlight of the balance sheet. But having said that, despite the very proactive investment, our net asset is 47 billion. We have 43% in equity ratio, which is very solid in terms of the balance sheet, the health of the balance sheet. Well, as I mentioned at the very beginning, we have conducted a share buyback program. Conducted a share buyback program announcement just today, and you can see the outline here. Well, given the balance sheet situation as well as the operating cash flow situation, we have decided to enhance the shareholder return as well as the capital efficiency. From that perspective, we have decided to conduct a share buyback program. In terms of the shares, at the maximum 2.14 million shares, or 5.05%, that will be included. And at the maximum, the acquisition price is 3.5 billion. So starting tomorrow, January the 15th, we are starting this program.
And the revision of the business forecast. This is a bit hard to read. And the right-hand side, this is the new plan. We have revised the landing numbers to align with these new plan numbers. As we have mentioned, excluding the lily color, those numbers excluding lily colors on a consolidated basis exceeded pre-COVID for the latest 3 months and also the 9 months year to date. Especially the latest 3 months, we hit the record high net sales. So the business itself is solidly progressing. But in terms of the plan, the growth rate was excessively forecasted. So compared to the plan, it's below the original plan. And also lily color that has made as our subsidiary their performance is on a downward trend. Therefore, this was also the downward impact compared to the previous announcement that was on the July 11th. So that's why we announced the new one, 59 billion, and the after tax, this is 4 billion, and the ordinary profit and the net sales, those are still the record high numbers. These are the announced numbers, and for the year ending in February 2026 and beyond, including the Novalese, the subsidiaries numbers, those are under scrutiny. So as soon as we complete the review, then we would like to make an announcement. And next is the Q3 business summary. This is the actual of the opening and extension and the close. We opened the 9 facility and extended those floor space. So in total, 4,093 tsubo, and the rental space wise is 2,700 tsubo, and this 4,093 tsubo is a net income, and we are extending those floor spaces. And these are the actual numbers: meeting rooms, lodging, accommodation. In total, 277 facilities, and the contracted floor space is 160,000 tsubo. And we are the operators of such a rental space and the lodging and the hotel facilities. And next is the KPI transition, the net sales per tsubo. This is the comparison pre-COVID and the post-COVID. The right-hand side is the Q3 landing level. The 37,980 yen is the sales per tsubo. As you can see here, the pre-COVID number is at the level of the pre-COVID. And the unit price has come back. And in the future, we want to extend the floor space. At the same time, we would like to increase the unit price to contribute significantly to the net sales increase. This is my last part. Rental space, flexible space by usage. So this is looking at the sales mix. And the right-hand side is the Q3 this year. As you can see here, there's no outliers. This is the good sales mix to recognize the net sales. So volume-wise and the revenue-wise, we would like to continue to grow those in Q4 and beyond. That concludes my part, including the summary of those numbers and financials. And Mr. Kawano will talk about the update on the business strategy. Thank you. So let me give you the update. First is a rental space and the flexible space. In Q3, 2,700 tsubo new opening was achieved. Q1, 349 tsubo, and the Q2, 1,265 tsubo, and the Q3, 2,700 tsubo. Altogether, 3 quarters, close to the 5,000 tsubo extension has been achieved. And in Q2 result announcement, I said that we are planning to increase by 3,000 tsubo in the second half. And with these, I think those are almost attained. And we made the announcement the other day. This is about the Fabit. The rental space, meeting space is extending, and there is the increasing need. And as you saw on the presentation materials, the ordinary profit is a record high, and the net sales is increasing. Well, there are some voices that maybe forecast was too high, but if you look at the year-on-year comparison, TKP rental space growth is very steady. Previously, with Regus, we were running the flexible office, the meeting room, but the Regus was divested, and that part was missing. But this time, Fabit has been acquired from Apaman, so we are re-entering into the flexible office market. That is the Fabit business. And currently, there are 20 sites, Hawaii and Bangkok, as overseas and also domestic site. And the TKP is combined together, so TKP Fabit or Fabit by TKP. TKP resource is multiplied by the Fabit. So this is the joint opening with TKP. The difference with the Regus, well, Regus was 100% subsidiary, but this time we received the business transfer. So as a part of the TKP main business, we will be rolling out the TKP Fabit. That is the difference. TKP and Fabit, well, I will be directly navigating TKP and Fabit. So, for example, the space could be leased out on an hourly basis or monthly basis or used as a co-working space. So we want to roll out the flexible office spaces. And the grade variation strategy. The rental space and co-working space and the virtual office space stores will be rolled out, and also the Fabit spot. This feature will be provided. TKP's rental space lounge will be used. The business people who are on the move or a business trip, or the people who are working remotely. So the people who are using the TKP meeting rooms, they can use this space temporarily as a lounge and their own spaces. And the rental office, if the people want the independent office, then we will lease out such space as a short-term office for those users. So we'll be very flexible. By combining the TKP resources, we do have the comprehensive outsourcing structure. With the acquisition of the Fabit, TKP, well, actually the freelancers and the virtual office users and the startup companies and small medium business people and the medium-sized and the large enterprise users. Well, it used to be the focus on the enterprise large companies as the office demand, but now or in going forward, this product or the offering could be used by the many different people. Next is the hotel, leisure, and lodging business. In Q3, Appa Hotel Wakayama opened, and Appa Hotel Shonan Tsujido Ekimae, and also Rectore Yugawara was renovated, so it's called the Grand Rectore Yugawara. It used to be used as the company's seminar hotel. 105 rooms were available, but the number of the rooms were reduced to 55 rooms, and the double the room space, so individuals and inbound users can use that. And the hot springs, well, sauna, spa, and the hot springs are available, and the people can utilize this facility, and this will open in February.
Also in Beppu City, Oita, we have a Shonin Park facility. So in July this year, we are opening. Furthermore, in terms of more progress on openings, these are the ones to be opened. In February, we are opening Yugawara, and in April, TKP Cottage Hotel within Ion Mall. Cottage Hotel Hanyu will be opened. And after that, it will be followed by Shonin Park in Beppu, Oita in December this year. We have Upper Hotel Oita Ekimae opening. And after that, Hakone Gora will be opened in 2027. So the existing Legator will be renovated into a new hotel. Just recently, in January, Upper Hotel Shonan Tsuchido, and in February, Momoyama was also opened. All of the directly operated hotels are under operation. There are 29 facilities. Next, I'd like to talk about strategic investments and business alliances. The red triangle shows the existing TKP business, the rental space, and at the top is SARC, bridal business, Novalis, which is our subsidiary, and also preferred shares were purchased today for Escri. So those are under the SARC brand. So on weekdays, we are providing these services to corporate customers. For rental office, we have a Fabit brand. That's the brand under which we are conducting this rental office business going forward. For Lily Color, we are enhancing this business towards the vertical integrated business model. Especially for Escri, Novalis, for the collaboration under the bridal business, we are expanding the collaboration going forward. And also for Shoningahama, this is under the regional revitalization initiative. So strategically, we are making business investments. Let me give you some more details on this. First, on bridal business. At the moment, we have Novaris. 60% of the stake or shares of Novaris is acquired. And in December last year, we consolidated this business into TKP Corporation. For Escrit, at the moment, we have 12.59% of common shares. And on top of that, a Class A share of 3,000 shares have been acquired as well. For bridal business, this is the positioning of our company. Escrit was focused on standard type of wedding services in the middle. Compared with that, Novaris is focused on luxury wedding services. So with these two areas to be expanded, we would like to capture the core market. For bridal, before COVID-19 pandemic, we have had some markets. The market size at that time was 700 billion. It is down to 80% compared with the pre-COVID market size. So there are some winners and losers in this industry. So, but there still is 80% market remaining. Therefore, we would like to expand our revenues and volume as much as possible in this market. And another area is the lighter market, like photo-based wedding services. And this is the area which is expanding. So how to capture this photo-based wedding is the key to the success in the wedding business. In that sense, TKP Corporation is capturing both standard and luxury services. So we have omnidirectional positioning. We can expand into both directions, luxury direction and economy direction. So by expanding both, we can offer new types of wedding services going forward. Next, I'd like to talk about our collaboration with Lily Color. First of all, there is a collaboration with Upperman at the moment with the Upperman's managed properties. We are offering the wallpaper replacement services using Lily Color capability. And also we are promoting collaboration between Lily Color and TKP. Using Fabit, there are 20 offices today. We are expanding it to 100 in the near future. And we are converting some of the TKP into Fabit facilities. And as we do so, we will place orders with Lily Color. So with the Lily Color capabilities, we are creating new rental offices. So those are the three business areas we are focusing today. First is rental space, flexible space business. At the moment, opening momentum is gathering. We are very proactive in opening new rental space. Of course, we are being selective, although we are increasing the volume. Going forward, we will focus on large-sized facilities, both for Fabit, TKP, and bridal. With those contents, we can offer complex office service offerings, including large-sized facilities. Next is the hotel and leisure and lodging business. For this business, because of the yen's depreciation going on, there still is a very solid demand that we are enjoying. Therefore, to capture those strong demand, we are proactively opening new facilities and expanding the floor space so that we can offer more service to inbound tourists. And we are converting some of the facilities for inbound facilities. The third area is strategic investment and business alliance by focusing on Lily Color business. At the moment, our OP margin is quite low. Therefore, we would like to focus on enhancing this margin. That is my own personal challenge. So we would like to implement various initiatives here. And in the bridal industry, we have converted Novalis into a subsidiary. So we would like to promote the collaboration with Lily Color and other companies outside so that we can enhance the business. Last year, we have conducted a lot of business investments. Next year, we are focusing on recovering the investments and the consolidated sales of 100 billion. Next year, we should be able to exceed this. Not only this, we would like to enhance the operating profits as well. And earlier, we have announced the share buyback program. And this is the first action that we are taking as the company for shareholders. We have thought about different ways, but we thought that this would be most impactful. And 3.5 billion yen. If you think about floating shares, this would be a very effective number of shares that we are planning to acquire within this program. So this will be a shareholder return. In terms of profits, if you compare with the same time last year or same quarter last year, operating profit has a strong upward momentum, and our profits are growing very strongly. And together with Fabit on top of that, and we are expecting much more momentum in terms of the net sales and the profits. So meeting rooms and rental office will be combined together as an offering. And we can also do the bridal business. And if there are partners we can find, we want to also expand the bridal business. So both the hardware and software are getting ready. And in the bridal area, we have acquired some skills like flower arrangement and plant arrangements and so forth. And we can cater those capabilities for the receptions of corporate customers. So together with the downward revision, we have announced those new events and businesses. So if you could understand the current momentum of the business that we have today, despite the downward revision of the forecasts, I'm sure that you would understand a very strong momentum, which would allow us to increase the profits going forward. Thank you. That is all my presentation.